Hello and welcome everyone to the July e-newsletter. This time around, we decided to mix things up a little bit. Usually, we would just send you written e-newsletters, but we decided to do a video to make things a little bit more interesting. So, in this video, we would be elaborating on some of the bullet points included in the e-newsletter. On the COVID front, the vaccine rollout has been progressing well. Some countries are well ahead of the rest. Think of the US, the UK, some of the European countries. China is progressing quite well, vaccinating more than 50 million people a day. Locally in New Zealand, we are lagging a little bit, largely because of delays in shipments, something we did predict in our e-newsletter in March when the government announced its vaccine rollout plan. The big concern is the surge in Delta variant overseas and even closer to home across the Tasman in Australia. More than half the country is in lockdown. Fortunately, in New Zealand, we do not have any community cases so far. The big concern is that the surge in cases can disrupt the economic reopening and the return to some sort of normality as the world was progressing. Governments all over the world have been striving to return to some sort of a normal and reopen their respective economies. The silver lining is, so far the evidence suggests that Delta variant is not causing a proportionate surge in hospitalizations or deaths, particularly in populations which have been vaccinated. So the key is vaccinations, and hopefully the progress will continue on that front, and the world will return to some sort of a normal over the coming months. What has been happening in the financial markets? The markets have been trending upwards largely over the past few weeks. But that said, there has been quite a bit of volatility to go with it. The volatility has been caused, as I've mentioned, due to the surge in cases through the Delta variant. So the concerns that is the progress towards an economic reopening getting delayed or stalled, or we're going backwards. But there is a fair bit of optimism that the world will continue to progress. There has been another concern, which is inflation. So what has happened, as we've mentioned in some of our previous e-newsletters, there has been a lot of pent-up demand as a result of the world largely being in lockdown, and the quantitative easing by central banks and governments all over the world has created a fair bit of consumer spending capacity. And that demand, along with the supply disruptions that you would be aware of over the recent months, it's been all over the news, has created a bit of a gap, and that gap can result in inflation. Now, inflation is not a villain. Don't get me wrong on that. Inflation is needed for economic growth. After all, businesses need inflation to be able to charge, higher prices and grow their revenues. But rapidly increasing inflation, or inflation that turns out to be higher than anticipated, can be can have negative impact on the economy. So central banks typically raise interest rates to control inflation. The concern locally, we've just seen that the latest inflation figure that came out, it was 3.3%, which is highest in 10 years and higher than the RBNZ target band rate for inflation, which is 1 to 3%. So there is anticipation that RBNZ is going to raise interest rates earlier than previously was expected. The impact of rising interest rates and inflation is particularly evident on low income generating assets such as fixed income or growth companies, high growth companies, which may not be generating high cash flows today, but have the potential to grow cash flows in future. So how would you be placing your portfolios? The inflation defensive sectors would include, as I said, high cash flow generating businesses. So in present times, what comes to my mind is the big technology businesses in the US. They have massive balance sheets. So even if they decide to bear the brunt of rising cost, they can do so because they have the capacity on the balance sheet. But they are some of the highest cash generating businesses of present time. So that does provide them quite a bit of a buffer in times of rising costs due to inflation. The other sectors which may benefit is obviously financials, because in a rising interest rate environment, banks can enjoy better revenues, because the interest rate margin, they've got more capacity to increase that. And then there's the industrials, which have the capacity to have the pricing power to pass on the rising costs onto their customers. So those kind of businesses can be inflation defensive and can be expected to fare well, at least in this initial transitory period where inflation starts to rise. We haven't had any inflation. The world hasn't had much of inflation in particularly the developed world over the last few years. So yes, there will be a transitory period, but if inflation is not a runaway and interest rates are not increased or raised at a higher rate than anticipated, then that could be the ideal outcome. So that's it for this time around. Hope you like the video, and do give us some feedback. And we'll see you again next month. Take care.